Hi, fellow traders. I hope everybody had a great hump day. You've got a good week going so far. This week's been a little slower than I would have liked to see. For me, after the last 2 weeks, I was, I was pumped up coming into this week and kind of dug a hole for myself on Monday. But everything is back on track. So pretty happy about the way things, are going. Today was a weird day. I'm gonna kind of go through my watch list here and kind of show you something. This is really the reason why I always say when you first start learning how to trade, trade with a clean chart. I'm not saying moving averages and stuff aren't important. We all know they are, but sometimes they create layers and they prevent us from seeing really good moves. And today is a real good example of that happening. So what we're going to do here is we're going to take a look at a couple of stocks that were on my watch list today. So let's look at KMX. Now, the reason why I didn't take KMX, here was the place. Now, I know this wasn't the actual 5-minute opening range low, but anytime you get a huge wick like this, I just go with the body. And, this would have been the entry here. But look at what I would have had the short into. The 50 moving average, the 90, which is sitting right here. And then if I waited after all that, here's the 200. And then here's red to green. So I'm looking at all of this. And this is telling me, this doesn't make sense. I'm not going to short into support. And all of this is legitimately potential support. All of the moving averages, because we see them bounce off these every day. But it would just look really crowded. I mean, look at the chart. Look at it now. Look how crowded it is. So I'm going to take the studies off. And let's take a look at it. Now, look at how beautiful this move was. Here's the opening range low that we use. Remember, the wick is, longer than the body here, so I'm going to use the body. It took about 15 minutes, but it finally broke it. Here's the entry right here. And look at, even from the entry here to here is about 80 cents. And then from here to here, same thing. And then look at this huge window down here. I mean, beautiful windows. This is a 5-point move. I mean, practically a 5-point move from here down to here. And I missed this whole doggone thing because this is what I'm looking at. That's what I'm looking at. I'm looking at all of this, and it just clouded that whole chart. All right? If that's not enough to convince you, let's look at KBH. KBH is one that I didn't even put on my watch list because the ATR was less than $1, and it just looked like there was a whole lot of traffic here. Not much room. We had the 200. Then we had red to green down here. We just had a lot going on. So let me take the studies off. And look, here again, we got the that long wick, so we're going to go with the body. The entry is right here, right at 26. The next level we run into is going to be the red to green, which is right here. This is kind of where it reacted to. But that would be a good target. But here's the next daily level here. Then here's the next one. These two stocks made huge, clean moves today. I completely missed them, didn't take them, because this is what I'm looking at. And now again, I'm not saying you need to disregard all of these moving averages and things. It's just that today I'm sitting here looking at, instead of me focusing on the candles, on the candlestick formations, and reading the price action, I'm looking at all of the traffic in here. I'm looking at all of this mess. And yeah, you want to respect it, but you also want to be able to be objective and read the price action. I was sitting here looking at it, and there's weakness all over the place. Both of these stocks. Big weakness. And just completely missed it because of just a crowded chart is what it was. Now, this doesn't happen every day. Today was just one of those, unique days where all of these charts just got crowded like that. The other stock I had on watch was SQ, and we were looking for a long on this. I was ready to take this long. We were looking for this to push to 100. The first candle open looked pretty good. It was an indecision candle, which is not bad. So I'm looking for it to take off and push up, and it sells off. I'm waiting to get in this long. I'm waiting, ready to click the button. And had this gone up a little bit further, it would have baited me in. But this thing sold off pretty hard, and it was just a choppy mess here. You can see it really didn't offer much all day. So this wasn't a good trade. It was smart to not take it. I could have forced the issue, but I might have made $30, $40 or got stopped out, one of the two. So we didn't trade that one. The other one I had on watch was NKE. Now this is the one I was watching on for earnings. And we're going to talk about earnings here in a minute, because there's an earnings trade that I took this evening. A couple of you guys were in the room still. But I'm going to talk about it here in a minute, and actually going to start talking about earnings tomorrow in the day trading class. But you can see here how choppy this thing opened. It just wasn't much. It was just a mess. Now this thing grinded and chopped its way up. But if you're in a small account and you're trying to manage your risk, you would have gotten chopped out of this thing several times before you ever made any money. So this isn't the type price action that, we're really looking for. Really, you could have taken it off the VWAP here, but then look, you got the daily 20 coming across right here. Gotta respect it. But just everything today just did not look clean. Just didn't look clear. And for you or for me, it might have looked that way. For somebody else in the stocks that they trade, might have been a beautiful day for them. But you have to trade within yourself. And one of the lessons that I try to show and teach every day is, if the market is not where it needs to be, don't force it. You got to be patient. If you're patient and let things come to you, you're going to do a lot better. A lot less stress. it just makes the whole world go around a lot better. So, that was my day today. That's why I didn't take any trades this morning. And then later on in the day, it just, the market just wasn't there. It was not there for me. I never really felt comfortable. So I didn't take any trades. But I did take earnings trade. I've shared with you guys, I do like trading these. Here is BBBY. This was the only one that had any volume. The good thing is, the last couple of days, it's just been a couple of them that just only one or two have volume, so it's been easy to pick. And obviously, if you just sit there and look at it, it looks simple. It looks real easy. You get in, you wait for earnings, you take profit. But there's a lot that goes on before you get there. I had to go through and had to do kind of my research, which I'm trying to find out. I go back and look at what it did on earnings the last 2 or 3 times, or really specifically, since this is the third reporting period, the first and second reporting period this week. First quarter, when it presented earnings from fourth quarter the previous year, and then second quarter, I'm looking at that. I'm looking at specific analysts that come up with earnings forecasts. I'm looking at them, and I'm getting a good feel for what the stock's going to do, where the company is right now. And yeah, you gotta predict how the market is going to digest this. So there is risk involved. Just like any other part of trading, there is risk involved. But instead of it being 50-50, I've got a 70% chance that the stock's going to go my way. And I feel a 70-75% chance that it's going to go my way. And sometimes, and you've seen one or two of the examples I showed you last week, a stock will go in the opposite direction. It'll flash up and then it'll drop down, or it'll flash down and then go up. You just have to believe and understand what you're going to have to deal with. So it's not as easy as it looks all the time. But we're going to talk about this tomorrow. We'll start talking about it. But like I said, newer traders that aren't really consistent trading normal hours, should not try to do this. You've got to have patience. You've got to have your emotions in check. And, if you don't, it's not going to end well for you. So that's why I don't really talk a whole lot about pre-market trading. I don't talk a lot about after-market trading. I want us to focus on the day. But I do want to give you, help you understand what I'm doing with earnings, because that can actually help you when we're trading in the morning. Because most of the stocks that we trade are on earnings. There's stocks that report earnings, and that's what we're looking at. And if you have some good background information already, it might help you plan your trade a little bit better in the morning. So what I looked at on this, I always wait for a stock. If I'm thinking a stock is going to sell off, I'm going to look for the spike, and then I'm going to look for it to try to make a new high. When it can't, I just kind of wait, and later on in the day, it's got to be after 2 o'clock. I'm not going to get in any earlier. So once I feel that it's done with this upward momentum and that we're going to get ready for the sell-off, then I get short. And that's what I did here. Now, if I'm looking for it to go long, obviously I'm going to wait for the dips, because they're going to dip it below, take it red on the day. Bait inexperienced traders in, or traders who may be looking for it. It's like it's red, so it's going to have to sell off. It's going to sell off on earnings. Or it's green, it's going to have to go up. But you can see on this one, it did just the opposite. So let's look at what's the other one? NKE. Let's look at NKE from yesterday. This one. There we go. I had to blow it up for some reason. So we look at NKE from yesterday. This is where I covered this morning. Not covered, but I sold. I went long, like I was telling you this morning. I went long off where it sold off. It ran into the 50 on the daily chart right in here. This is where I bought it and dumped it here this morning. But look at what it did. Look at what NKE did. Here you held it below, then we took it green. It pulled back, but then they kept it green going into the close. This is what confused me and what kept me from trading the stock. All through here, I thought it was going to be a long. But then once they brought it back over and it closed, green, then I figured, well, it's probably going to sell off. I wasn't going to touch it anymore because it wasn't doing what I felt like it was going to do. So I waited and got a pretty decent bounce off of this. But all of these things, over the next couple weeks, we're going to talk about in the day trading class. So you'll have a better idea of how to interpret earnings. Really, it's not about what we think. Now, we're going to go through the information. We're going to form an opinion as to how, which way we think the market's going to interpret this. But the bottom line is we still have to wait and see what the market is doing. We got to listen to the market to tell us what it wants to do with it. And you almost have to become a market whisperer. Now, sometimes it may, I get on the wrong side of things. Sometimes I'm hard-headed and I make up my own mind and I don't listen. And I end up paying for it. But, then I realize, hey, I didn't listen to the market. And so I try to do that more often than not now. All right, but that's going to do it for me today. We're going to get back at it in the morning and see if we can continue to build. And we'll have class tomorrow at 4:30. And we will go from there. So you guys take it easy. I'm sorry if you hear stuff. We got a thunderstorm that just popped up. So we had some lightning outside. So it kind of startled me. But you guys take care. And I will catch you in the morning.